Air New Zealand's profit growth has been cancelled due to weaker demand for travel. How the economic environment is impacting the airline.
Domestically, we're still seeing people want to travel for leisure, but the market needs to be stimulated for them to do that. So what we're seeing is that our average price for fares is down a bit on what it was a year ago.
Air New Zealand just made an annual net profit of $146 million, down 65% on the previous year. The result was as expected. The airline downgraded its financial forecast throughout the financial year as the economy weakened.
A tougher economic backdrop here in New Zealand has also impacted our domestic network, particularly in the corporate and government sectors. Government spend, for example, is down 28% versus a year ago.
Costs across the company, excluding fuel, increased by 6%, with the largest increases seen in aircraft operations and maintenance. The airline estimates its earnings could have been $100 million higher if it wasn't for inflation. Over the past 5 years, its total cost base, excluding fuel, has increased by 20 to 25%. Over the year, it flew 16.5 million passengers as it increased the number of flights across the group. But the slowdown hit hard in the last few months and demand is deteriorating. With engine issues outside of its control forcing it to ground planes, capacity will be largely flat going forward.
You'll be aware of the ongoing challenges we face with Pratt and Rolls-Royce engines, which means we have aircraft that are just frankly unable to fly. At the moment, that number is 10, 4 Dreamliners and 6 Airbuses.
It expects this financial year it'll have group capacity at 92% of pre-COVID levels. But with the economic environment so uncertain, the Chief Executive Greg Foran isn't giving investors any guidance. But he did give me more detail on how earnings look across its network in the face of more competition from US airlines.
Madison.
Good morning, Greg.
Good morning.
Thank you so much for having us, really appreciate it. Let's talk about that demand picture first. Very clearly deteriorated in that second half of the year. Can you just give us the full picture? Was it a decline? Was it just softer? And what do you actually put that down to, other than just a drop-off in government demand? Is it also people not taking holidays in this economy?
Yeah, it's a combination of things. What I would say in terms of the second half, in terms of demand, we're still seeing some pretty good demand out of the US to come here, but boy, we've got some extra capacity, like over 50% more capacity coming in than what we've previously had. But demand coming in has been pretty good, a little bit softer going out. Domestically, we're still seeing people want to travel for leisure, but the market needs to be stimulated for them to do that. So what we're seeing is that our average price for fares is down a bit on what it was a year ago. In terms of other areas of domestic, government, as I mentioned, is down about 28% on a year ago. Corporate and small medium enterprises are down about 10 to 12%. Now, those tend to be some of our most profitable categories because people tend to buy tickets late and therefore they're paying slightly higher fares. So to have each of those sectors down does have an impact domestically. Across the Tasman, it's still pretty good, and into Asia, in parts, it's still pretty good. A lot of people want to get to Denpasar for a holiday, so we've extended year round. Japan is good. China's a bit tougher. So a little bit of a mixed bag.
You did increase group capacity, but on the other side of that, your costs were up as well. Now your capacity is constrained because of scheduling challenges. So would you say that there's now more pressure on airfares going forward?
What we're saying at this stage is that certainly for the next 6 months, and we're now a couple of months into it, we're seeing similar conditions to what we've seen previously. What I see, and Richard and I, our CFO, were chatting about this with LG in commercial just the other day. It feels like we're sort of at the bottom of that cycle. It's a very difficult business to predict, but I'm hoping that the second half we start to see some green shoots both domestically and even internationally.
green shoots, that sounds like upwards pressure.
We would say in terms of demand, a little bit better. In terms of pricing on seats, I don't think you'll see too much change to what we currently have at the moment for the next 6 months.
On yield, can you explain your revenue per available seat kilometre? Where are you making the highest yield, on what routes, and perhaps where are you making declining yield?
What I'll tell you is that in terms of domestic, it's much harder for us. The jets generally not too bad across the country. Regional in parts can be okay, but in other parts pretty difficult. Across the Tasman is not too bad at this stage. America down reasonably considerably off the back of over 50% more capacity in there. So once again, it's one of those things that averages don't really tell you the whole story. You've got to get into the detail of it, but that's how it's playing out.
Headcount? What's happening with headcount?
We've taken about 400 people out of the business, and that was really in response to wanting to trim our sales as we saw the economic conditions. We've actually added some back into frontline positions. There's a few more cabin crew, there's some more engineers where we needed it. But where there's areas in the support office functions where we've been able to trim, that's what we've been doing. So that process is literally complete, and that's helped us save tens of millions of dollars.
Your share price has failed to fire since COVID, really. It's been under $1 for the best part of 3 years. If we see a recovery, do you expect that to recover with it?
For sure. It's something that we look at as anyone would when you're running a publicly listed company like ourselves. But there's a time for everything, and just at the moment, if you think about the process that we've been through with Air New Zealand, we go back to 2020, we had COVID, that went on for the best part of 2.5 years. We then delivered a pretty good result, $585 million last year. And that's off the back of plenty of tailwinds. We're now into this year with $211 million and plenty of headwinds. And some of those will be sustained. They'll go for a bit longer. The important thing is to understand what's happening, if you like, below the surface in Air New Zealand. What are we doing about improving the airline in terms of creating better customer propositions? And I've spoken about some of those already. Getting those 14 787s retrofitted with the latest product is a good investment. Building a new hangar out at the airport, a good investment. The other one is 50 years old. We don't want to leave some of these infrastructure projects and not invest. Putting in a $35 million new loyalty platform, replacing something that was put in 1989, and we've now, gone and put that in place. So I'm very comfortable with the direction of travel. It is frustrating with some of these headwinds, and that's why I take my hat off to all our team who are doing a terrific job. Having 10 of your best planes, that's $1 billion worth of capital sitting on the ground. Not every airline has to deal with that, because not every airline is running Pratt & Whitney 1100 engines. Half our Airbus fleet have V2500 engines. They're no problem. It just happens to be that half the other fleet has the latest engine, which is a problem. Now there's 1,000 of those engines backed up trying to get into a repair shop around the world at the moment. There are over 400 planes on the ground who run those engines. Some of our competitors don't have that problem because they don't have that engine.
It feels like after COVID, Air New Zealand kind of just can't catch a break, right? You said during COVID that Air New Zealand would be a smaller airline eventually. Is that what this is?
No. I'm very comfortable that we've got good aspirations here for growth, and we have our fingers crossed with Boeing that at the end of next year we start the delivery of new Dreamliners. Now we hope that we're going to have 2. That is the potential then to start exploring new routes. So no, this isn't about a smaller airline, it's about an airline that's going to be fit for purpose and one that will grow. Just at the moment, because of circumstances that not everyone is dealing with, we're having to sort of double down and work extra hard because we've got $1 billion worth of fleet we can't use.
Thanks so much, Greg. Appreciate it.
No problem.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.